Welcome everyone, another great video. Why don't retirees spend their money? When I dig in some data to see exactly why that is. This data comes from BlackRock, that a white paper that came out in December 2024 entitled To Spend or Not to Spend.
Yep.
The takeaway here, Kevin, on average across all wealth levels, not just high, not low, all wealth levels, most current retirees still had 80% of their pre-retirement savings 2 decades into retirement. 20 years later of retirement, they still had almost all of their pre-retirement savings. Why are they not spending down their money? Let's find out.
Well, yeah, and as we can see by the charts here, basically, as you go along, you've got the sort of the three sectors there: the orange, the yellow, and the pink. And orange being on the lower end of the liquid assets, and we must mention that's liquid, not net worth, no houses or anything else included. More retirement scenario overall. Your yellow is your mid range, and then your pink is on the higher range. And if we really just take a look at that far side, the majority of these people are still growing their investments, 100% plus. Whereas in that 80 range, you sort of got that scenario saying, okay, they're on track and everything else. And on the lower end, maybe a little bit more in the beginning, but it starts to smooth out as you go 20 plus years into retirement.
And that's just the data backing up the fact there that 80% of their wealth maintains. So you have a big chunk of folks across all wealth levels that still have a majority of their wealth even 20 years into retirement. So why is that the case? So some of the key findings of this white paper, one is simply retirees prefer to keep their assets untouched.
Yeah.
So we like to see the number go up. We don't like seeing the number go down.
No.
Even if the plan is to spend down the money, we simply don't like that. And they have a survey here to back that up. This is the BlackRock study. The survey that asked how many people would be comfortable spending down their assets in retirement if that was part of the plan. And you can see only 32% were comfortable. A portion were not sure about it, didn't feel great. And then 34% were simply not comfortable. So you had almost 2/3 that were like, I'm not sure about spending up my assets, even if that's the plan. And I think a lot of that has to do with people and our mindset of how we've saved for years. The number keeps going up largely because we're adding to it and it's growing. And in retirement, as we spend the money, it's going to probably decline. And we don't like seeing the number go down.
And that's exactly. I mean, the biggest factor is you've been taught for many, many years, your entire career, you got to save and save and save so that you can spend at retirement. Well, by the time you saved and you've heard all those habits over that lifetime, you can't switch off and say, no, I got to spend it all now. Mostly the accumulation habits, they die hard. You're hampered by that, again, that fear, that the experience of, what happens if I'm financially not sound 15 years down the road, or maybe something medical come up and I need to pay for this. It's always that fear scenario that you're going to not have enough when you die or to live long enough before you die. And that's a big factor as to what's going on. So, I mean, if you take a look, you'll find that, there are some people that are comfortable spending, but by the same token, what we're getting off those numbers is that not everybody wants to spend those numbers down. It's less and less people that want to see that number drop or go below where it started, as opposed to those that, even if the plan says to spend it, we're just not spending it.
Yeah, so the key takeaways here: retirees prefer to keep their assets untouched. We like seeing the number go up. And the one you just mentioned, retirees retain their accumulation mindset. A combination of habits and fear is usually the reason why. And then the chart there, 1 in 4, or only 1 in 4, pardon me, had a goal when it came to their asset level. Most don't even have a goal, which is probably part of the solution there. But only 1 in 4 had a goal. And of those that had a goal, they actually wanted to increase their assets throughout retirement. They did not want to spend them down. So those with a goal, they're still uncomfortable with that spending. We have more to get through here, but we often get questions on retirement spending. If someone has a question, how would they get hold of us?
What you do is go to chatwithclintonandkevin.com. That is the easiest way to go. Give us all your questions. If you have trouble spending your retirement money, we'd be more than happy to talk to you about how to do it. Getting that plan, which is our mantra, and we always want to make sure you have that in place, because that'll start to ease some of the findings we've got here, especially when we're finding out that you don't have much of a plan there. So chatwithclintonandkevin.com. The questions come directly to Clinton and myself. We are the ones answering that, and we're more than happy to do it. But there's another point on that.
We do have a newsletter. So if you like this video, you'll probably enjoy our newsletter. It comes out about weekly with additional financial planning tips. So you can subscribe to the link in the description there. So we've talked about a few of the key findings. Retirees prefer to keep their assets untouched. They retain their accumulation mindset. Another has to do with how we spend, specifically the preference for more consistent spending.
Yeah, and I mean, if we can take a look at the chart that's sitting down there, I mean, the biggest one in that yellow line at 43%, that's consistent spending. That's the majority of your retirees. They don't want to spend more in the beginning. They don't want to spend more in the end. They want to spend the same amount throughout. And that's the big factor, because if they do that, they feel, okay, I can keep what I've got here. I don't have to worry about the numbers going up and down. I may grow my portfolio. If we take a look early, you'll see that only 16% want to spend more in the beginning and less in the end. And that exact same number also want to spend more in the end as opposed to spending in the beginning. And as we've said before, 25% have no goal whatsoever. They have no idea what they're doing with it. And that's where you need the plan aspect. But as we see, consistency seems to be the biggest factor in retirement spending.
And that consistency or want for consistency increases. One of the other key findings here, retirees more often plan to spend consistently. And after several years into retirement, the
Yep.
desire to spend consistently goes up to 61%. So it starts at about 43 and it actually goes up further into retirement. They simply want a consistent, steady number, almost like a paycheck, you might say.
Exactly.
And I think this comes back to habits. When you're working, you get a nice, steady paycheck for most folks. And then in retirement, we want something similar. We don't want our spending to change. Where this gets a little tricky is that spending patterns are not consistent.
No, never.
You deal with inflation, you deal with age and how things change as you go through life. That happens in retirement. Often people do spend more early in retirement, spend a little less in the middle years, and might spend a little extra in the latter years as you're going through perhaps health
Yep.
concerns or other items. So you do need a little more robust spending plan, and consistent across the board might not necessarily be possible. So we're saying, why would they not spend their money? Well, if they want consistency, but the reality is more of a U-shaped, well, that could be a bit of a dichotomy there. But what would be a solution? Well, that comes to our considerations. The top one on the list there, Kevin.
It's a budget. I mean, we will always stress this one no matter what. Before you even plan to go to retirement, what you should do, figure out what you're spending now, figure out what you think you're going to be spending in retirement. This is something that you can adjust over time. It's not written in stone, it can always be changed. But if you have that budget mentality mindset going in, chances are you're going to be able to hit those targets. You're going to be able to make that spending. And it can be more consistent if you know what you're going to be spending at certain times. So the likely change throughout your retirement, it's going to be adjusted no matter what, because it's a new area in your life. But having that budget mentality is really going to help with how you're going to spend your money down that way.
Yeah, those regular reviews are important. So you think about not where I'm going to be in 20 years, think about what you're going to be doing in the next couple of years, and then update as you go and expect there to be some changes. That is normal. And then for some of those other components there, like we said, if you had a fear of running out of money, if you really want to try to maintain the wealth because you don't want it to see depleted, well, having a plan with a couple of scenarios in it
Yep.
can help mitigate some of that fear and help kind of get a better grip on what would be realistic and sustainable for your retirement. So a multifaceted plan where you can ask if you would have questions could be helpful in that situation. If you love this video, we talked about kind of why people don't spend. Well, maybe a related question is, how much can I spend in retirement? This video answers exactly that. Click on that one. We'll see you soon.
Have a plan.